The market failed to build on the marginal gains from Wednesday. Meanwhile, trading on shares of Axis Bank has been suspended as the lender plans to finalize its holding structure switch. Mukhtar Mohammed, analyst at Assar Investments, joins me to review trading so far this week. Mukhtar, thank you so much for taking the time out to join us today. Bring us up to speed on how you have processed trading so far this week and what the highlights have been for you.
There's not really any major highlight this week. We've not seen any trigger from anywhere. I think mostly it's still investors still looking at taking dividends, being stocks. You can see portfolio reshuffling, moving to dividend-paying stocks. Definitely, that's what has been happening. There's not any news that have come out this week to excite the market going forward. And I think we'll continue to see that until we begin to get the first quarter results of some of these companies, or when we see those dividend investors begin to collect their dividend. Also, we could see some of those dividend finding their ways back into the market, especially it might be to equities that are yet to declare their dividend, or equity that they have declared their dividend, but the closing date has not it has not got into the closing date yet. We could see investors shoot to those equities. We could see volume move in those equities. So outside of that, it will take a lot to really move the market. Maybe an information comes in and then again it doesn't look like that, or even the first quarter result it's not coming at any time soon. Before we start seeing the first quarter result, we'll begin to get to the end of April. So there's no trigger this week.
Okay, how would you say Nigerian stocks pair up or match up against the emerging market peers in terms of valuations, in terms of P ratios, etc.?
Well, Esther, if you look at the PE ratio, you see Nigerian stocks are very cheap. When you look at the PE ratio, a PE ratio of a bank like Zenith Bank is still a PE ratio of 3. You see GTB also there, you see Access Bank also there. And so when you look at that, even if you go down, you see Dangote Cement also, the PE ratios are still very, very low comparable to our emerging market. So for now, Nigerian stocks still remain one of the cheapest. But the challenge investors have, especially foreign investors coming into the Nigerian market, is that exchange rate volatility that have not been sorted out yet, especially the two-way exchange rate system, in entry and exit, smooth entry, smooth exit. That has just been the challenge that the market is going to. If not for that, I think we may have been seeing a bullish run in the market, especially coupled with the high price of crude oil that we're getting, if we have really gotten our acts together.
Oh, well, we're not exactly benefiting from those high prices at this point. But, I mean, talking about local investors, they appear to have held the market, held forth, since that exodus of foreign investors, and, of course, for good reason. You just mentioned a difficulty in repatriating their funds back to their home countries. But talk to us about, how the local investors themselves, have played the market. What is the investment play? How are they cherry picking? And I guess I imagine they play mostly in the most liquid stocks, the banking sector, but is anything changing? What is the investing technique?
So nothing has really changed. Rather, the local investors, especially the retail investors, most of them invest for the short term, and some of them just invest for the payout and capital appreciation. Institutional investors, we've not really gotten so much from the pension fund. We've not seen those numbers that were planned to be raised. Maybe they should be investing up to 30 to 35% of their. We've not seen that play out. So it's more like the retail investors. And when it comes to the retail investors, I think cash is key, and that's why you see that when you look at the volume in some of these high-paying dividend stocks, you realize that it's the retail investors that are really patronizing these stocks so that they can make some liquidity. Especially most of the liquid investors that we have in the market now were those investors that used to play the fixed income space, and because of the low rate beginning to find themselves come to the equity market, fixed income yield of 3.4 or 4.4%. So, and that those are not people that are coming to stay long, because they are always the ones that do the 30 days, 90 days, 180 days, 365. So they are not the long-term player like we have. Otherwise, if the local investors have been long-term player, we would have seen a bullish run in the market, but because most of the retail investors are short-term players, we've not been able to see the bullish run despite some very good results from some equity